Hey everyone, welcome back to another video. Hope that you do enjoy and subscribe whatever you see here. I do hope that you do learn something, that you do like what you see as well. Today I'm in my Patagonia just because it's a little bit cold on the porch here where I film these videos. I haven't done like an in-person video in quite a while, so let's just get right into it. As you can see from the title of the video, this is going to go over companies' market cap numbers and what is the difference between small, medium, and large, or I should say small, mid, and large cap companies. Market cap is just what is the total value of the shares, like what is the share price times the total number of shares. That is equal to market cap. And with that being said, that makes like what a company is worth right now. Like what is their overall in the market, what is their worth? Because obviously the price of a share dictates what a stock is worth. Like intrinsically, like what does it actually mean? So with that being said, there's different kinds of investment vehicles like ETFs and mutual funds that you can invest in that are related to small cap, mid cap, and large cap companies. This just basically means like how do you want to split up? Like do you want to invest in smaller companies that maybe someday will become large cap? Do you want to invest in mid caps? They're like steady and they're way past the stage of being small, but they're not quite at that large stage and they never might become that large either. And then the large cap, which are like, they can fall like dominoes, like you can be the highest of the high, and then you can just fall and sink below large at any second. Like it's not given to become a large cap or to stay a large cap. So there's just like types of things that you can invest in as far as like market cap goes. So let's get right into it. Like what is small, mid, and large cap? Small cap is basically any company that's worth between 300 million and 2 billion. That means, smaller companies, their shares times their share price. Their share price is probably going to be not a penny stock, but probably not that much because there typically are millions of shares traded or hundreds of millions for a given company just because it makes it worth them being out on the market. It's not worth them being on the market if there's like 1,000 shares in total. That's not a thing. That's not why you would be in the capital markets trying to get money for your company. But with that being said, yeah, so 300 million to 2 billion is a small cap stock typically. Again, smaller companies, their dollar value of their shares are usually a lot less than what like a large cap is. For a mid cap, it's typically between 2 billion and 10 billion in market cap. That's a mid cap. With that being said, again, that's typically like a company that has a higher share price, obviously, than a small cap, and they're just a little bit more consistent. They're not in that early stage yet. They could be around for 10 plus years. They could have been around a while. They could have at once been a large cap, or obviously they also could have been a small cap and kind of moved up. But typically they're steady. They aren't going to fall back anytime soon, be it back into being like a smaller company. And they just are pretty consistent with the mid caps. You know what you're going to get typically with a mid cap company. And then large cap companies are, as I said, mid cap is between 2 and 10. It's anything over 10 billion is a large cap company. And with that being said, a large cap is just something, like a Facebook, a Google, an Amazon. Like those are like behemoths. Like those are like, ultra large companies, ultra large market cap. Microsoft, things like that. And you hope as your company progresses through the markets, through the years, that you become a large cap company. And a lot of times people do favor large cap companies when they invest like their 401k or whatnot. Large cap ETFs, large cap mutual funds, those are typically the more popular ones because they've made it, right? Like they've got enough sales, they've got enough profits, they've got enough earnings per share, whatever it might be, a good PE ratio to get to that point. So that's really what those three are: small, mid, and large cap. And again, if you didn't know that, now you know. So hope you enjoyed this video, and please do subscribe.